Hello everybody, ladies and gentlemen, this is Stock Market for Us. I'm glad to have all of you again in my channels once more. In these sections, I'm going to share with all of you on the stock market warrant, which I would break it into multiple videos. By the end of the final videos, I hope you will have a better knowledge on the stock market warrant and how to invest in the stock market warrants. For the disclaimer, all these videos on the stock market warrant are for educational purposes. There is no intention at any point of time signaling on buying or selling. If you would wish to buy or sell any of the available stock market warrants, kindly approach your investment banker or dealer for advice.
They will issue a warrant under MyEG. So this is what we call as a company issued warrant. A company issued warrant typically have a few what I will call a few specifics. Number one, a company issued warrant usually have more than 1 year expiry. Okay, the expiry is very long. Usually 3 to 5 years, I would say. 3 to 5 years is quite normal for company warrants, right? And the second thing that a company warrant have is the company warrant allows you to convert their warrants. You can convert the company warrants to the company ordinary shares. This is the most biggest differentiating factor in which if you are buying a company warrants at the end of maturity, it means at the end of the lifespan of 3 to 5 years, you can choose to convert it into a company shares, which what we call as an ordinary shares. During this period of time, warrant doesn't have any value. All right. What I mean by doesn't have any value is that it doesn't have the right to vote. It doesn't have the right to dividends. It doesn't have the right to a normal ordinary share have. Right. So if you are holding a warrants, you cannot even go to the company AGMs. Right. I mean annual general meetings. Right. So these are company warrants. So another type of warrants is what we call and what usually people buy is structured warrant. This is the second type of warrants, all right? Structured warrant typically issued by investment bankers, or commonly what we call them as IBs, okay? They are issued by investment bankers, brokers, or those are the people who issue it. People like Maybanks, RHB Banks, Kenanga, they issue structured warrants. And structured warrants typically have less than 1 year expiry date. So someone will ask, Doctor, so what is the big difference about that? The big difference about that is that structured warrant during expires, it will become nothing, right? It will become nothing. If you are holding a structured warrant and it expired out of the money, then you get nothing at all. So the money that you spend to buy this warrant, you will get burned off totally. Practically, the banks earn your money. So let me go one by one now. Now that you have company and structure, right? So company warrants, is everyone clear? So company warrants, very simple, just few points. A very long period of expiry. It can be converted to mother shares, but it doesn't give you the right like the ordinary shares, right? So structured warrant is the one that most people would deal with. It is issued by the investment bankers. It has a very short expiry, usually less than a year. Most of the time it's around 6 to 9 months. Seldom you have a warrant that lasts for 1 whole year. So most of the time 6 to 9 months. Okay, is it okay if I clear this page? Doctor is writing prescription. Also, I'm so sorry. Yeah. Right. So of course, we will talk about how to deal with put warrant, all right? So let's go through it step by step from my side so that even newbies will understand what is a warrant. Then we can go through the strategies and how we going to deal with them, right? So let's focus on structured warrant. I would like to issue this warrant and I will issue a few things, what we call as an exercise price, all right? Exercise price of 9 ringgit. So essentially what it means is that I am betting against you that Supermax cannot reach 9 ringgit. If Supermax do not reach 9 ringgit by the time of expired, whatever you paid for the warrant will be totally burned off. So this is why investment banker wanted to issue a warrant. When they issue a warrant, do you know when you issue a warrant, when an investment bank issue a warrant, they have literally almost zero cost. They just issue a piece of paper, not even a paper nowadays. Now it's just digital. What we call it, a digital certificate. So they just issue a digital certificate, and you buy from them maybe 5,000 ringgit, 2,000 ringgit. At the end of the day, they issue so much. They usually issue warrant in millions. So what are they getting in return? They are getting a few millions in return of the investor money to back against them that Supermax cannot reach 9 ringgit. So this is structured warrant. But of course, it's not as simple as that, because there is a calculation. How do you calculate the break-even? How do you calculate the intrinsic value? How do you make sure when you bought this warrant is almost 100% winning chance? So these are the things that I'm going to share with you step by step today. So yeah, electronic note, they just side betting. True, this is to make more money. For investment banker, is to make more money. They make tons and tons of money from all this warrant. Just look at all those, I would say all those construction sectors and property sectors that have crashed down for the past few years. All those warrant investment banker are earning a lot, right? So if there is investment banker here, I'm so sorry to expose you guys, but you guys are getting damn good bonuses, right? So structured warrant. The biggest focus that we need is in structured warrant. Because in a company warrant, most of the time, although the calculation is same, but in structured warrant, because you have a I would say the risk is that when it expired, you get burned totally. That is the risk, right? But in a company warrant, if it's expired and if the company is a good company in which in future the share price will still continue go up, then even at expiry, you convert it back to your ordinary shares, you still have the chance to get back your capital. So it's less risky for a company warrant. For a structured warrant, because you're betting against the IBs, so those are the things that we have to be prepared, right? So on January structured warrant, there's two types, all right? Two types of structured warrant, two types. One is what we call as a call warrant, right? Okay, call warrant, C-A-L-L, call. The next type is what we call as a put warrant, P-U-T, put warrant, right? So what are the difference between these two? The difference is simple. Call warrant, essentially, you are betting that an equities or a shares go up to the exercise value. Whereas a put warrant, you're betting the shares to come down to a certain value below. So this is the difference, call and put, right? Call warrant, essentially, the bank is not the banks, the IBs is saying that this share price, I'm side betting with you that it can reach 9 ringgit from 7 to 9. So I'm betting against with you, right? So a put warrant, they are betting that this share price will go down. So in Malaysia, the most common warrant that you can see is call warrant. Most of the company have call warrant, but not every company have a put warrant. There's seldom that you can find a put warrant unless in index stock. Or what I call indexes. Indexes like FBM, KLCI, like Shanghai A50, Hang Seng Index, the US S&P 500. What I call it, 1, 2, 3, 4. These 4 indexes in Malaysia, you can actually buy call and put, right? So it means that if you're looking that KLCI index will start to crash next week, then you should buy a put warrant to hedge against yourself, right? So if you're looking at that Hong Kong, maybe in November, there's a presidential election, and you believe that whoever wins the US market will crash, then you should buy a put warrant on S&P 500. So these are the differences between call and put warrant, all right? So we are done with the types of warrant. So now we can go in. Is there anything that you guys want to ask? Is there a limit to a certain bank can issue the number of warrant against Supermax? No, there's no limit. They just need to come up with their structure and all those things and apply it through what we call the security commissions. And once the security commission approve it, then they can list it on Bursa, right? I'm not from the IB side, so I'm not sure what are the restrictions. But last I heard, the company to be issued warrant, it needs to be a certain market cap, right? What are the number of issue warrant? Any minimum or max? As I said, there's no minimum or max. They can issue whatever number they want. But most of I would say the smallest warrant that I've ever seen is maybe around 20 million shares. But the highest amount I've ever seen is around 200 million shares, if I'm not mistaken, right? Can IB buy back warrant they sell to market? Yes, they can. Whoever that issue a warrant need to what we call there is a market maker in every warrant, right? So what is a market maker? So let's go into it. So every warrant issued in the market, okay? Any warrant issued in the market, they need a market maker. So you guys will start asking again, okay, what the hell is a market maker, right? So market maker is very simple. Unlike ordinary shares, unlike normal equities like Supermax, Top Glove, or whatever company, MyEG or Tenaga, all these big equities, there are a lot of people buying and selling, correct? So when there's a lot of people buying and selling, so there's liquidity in the market. So you can buy and sell, and there's a number of people that will buy from you and will sell for you. But warrant is different. Not every warrant have a buyer and a seller. At times, if the warrant is losing money, like properties company that's crashing down, can you imagine if someone issue a warrant early this year and now the property market is like going downtrend? Anyone who want to buy the warrant? No, right? So when there's no one buying and selling, market maker come into the pictures, right? So market maker is actually what they do is they have to provide liquidity to the warrant that has been issued. So if you always see the buy and what we call as a bid and ask price, okay? In the bid and ask price, there's always, in a warrant, there's always people buying and selling, correct or not? But those might not be the normal investor. It can be the market maker. And usually the market maker will queue anyway. Let me just put an example here. Let's say there is someone bidding for 99 cents, 98 cents, 97 cents, and someone is trying to sell for $1, 101, 102, right? And coincidentally that this warrant is not popular. There's no one buying and selling at all. So what happens is market maker will come in and offer 1,000 lots to buy and sell. So they are not trading, they are just providing liquidity. So market maker in a warrants have this job. So at any point of time, a warrant that is being issued must have a market maker, and the market maker must provide liquidity to buy and sell this warrant. This provides safety to the investors, right? So what happened, like if you bought a warrant at 1 ringgit and the share price crash and you are losing, right? You are losing is fine, but there is no liquidity at all. You wanted to sell, there's no one buying from you. So you might end up total loss, right? This is why market maker have the responsibility to buy it back from you at 99 cents, 98 cents, or 97 cents at whatever intrinsic price that is correct at that point of time. So this is why market maker is important. I saw Chin Kong Yu ask, who are these market maker? Market maker are usually IB themselves, investment banker themselves. Usually Kenanga who issue this warrant, the market maker will be Kenanga themselves. So they will be doing the buying and selling at the same time. So market maker will do the buy and sell at the same time. And at times they will also buy back when they are running out of the warrant shares. At times, they will also sell more if you wanted more. So this is why market maker is important. And so very important to identify where your market maker is, because with the knowledge of where your market maker is, you will know when you want to sell your shares or you want to sell your warrants, who is going to buy it from you. It might not be you or me or anyone here in the student list, but it will be the market maker.